Hi everyone, welcome back to Say You Want to Buy a Home. Once again, I'm Aden. I'm a new realtor on my journey to buy my first home. And I'm guessing that if you're watching this series, you're probably in the same boat as me or a similar situation.
I'm Jason Harper. I'm a broker for Harper Home Company, in-house lender. Today we plan to tackle, we're going to talk a lot about credit. Going to kind of tackle some of the questions or challenges people have when it comes to that. So whether you're a first-time home buyer or maybe even somebody who's rebounding from maybe just some life circumstances where credit took a hit, I think we got you covered, and we'll have some info in here that will probably be useful to you. So let's do it.
All right, well, let's get started.
Put these bad boys on so I can read some of my stats.
All right, so we'll start with the basics. Now, I'm gonna assume that most of you know what a credit score is, but in case that somebody watching this doesn't, you want to give them a quick refresher on like what a credit score is and what it is measured by?
Yeah, I mean, I think everybody looks at a credit score as just like a 3-digit number, but that number is, while it's important, I think understanding the factors behind the number are more important. But ultimately, a lender or a bank is going to look at your credit score as their way of assessing whether or not they'll lend to you, how risky it might be. And then once you kind of get past that hurdle, then it becomes, the better the rate, the more options you might have. And then obviously the better score you have, the better the interest rates will be for you, which is either going to give you a better payment monthly or increased purchase power for you. So there's a lot behind it, but yeah, in short, 3-digit number pretty much tells the bank how risky you are to loan to.
Right on. Well, so if my credit score is low, does that mean I'm doomed to terrible rates or just like no loans at all?
No. There's plenty of options. Again, it's all risk and reward for the lender, right? So they don't just look at your score, and we'll dive into kind of what they look at, but I think the easiest way to look at it is the lower your score is, the higher your rate you can expect your rate to be, which is going to limit what you can go out and buy. FHA has definitely, I've seen FHA down to 540 FICO score, which is good. And the nice thing with a loan like that is you only need 3.5% down. So no, definitely not. I would say I would not let a low credit score prevent you from getting into a home. It's better to get into a house just because the mortgage on your credit, and especially with timely payments, is going to increase your credit score and give you the ability to refinance and bring your rate down later. But in the meantime, at least get into the house and start building equity and things of that nature. So no, you're not doomed.
So the next topic I wanted to bring up was what makes up a credit score? What do I have to do to bring mine up?
Yeah, cool. I know we talked about going through that question, so I actually pulled up the exact numbers because there's like 5 major factors that make up a score, and I wanted everybody to have like the percentage of which each of those factors were. So the first one is your payment history. That's going to make up 35% of your score. So real simply put, just pay your bills on time. That is the largest factor in your credit score, is whether you pay on time. 30%, so number 2 is credit utilization. And this is one where I think people can kind of goof up on both ends of the spectrum. So you don't want to max out your cards, but there's a lot of people who also open a card and never use a card. And so lenders don't just want to see that your credit was good enough to open a card. They actually want to see you using it and being responsible and paying it off. So at the very top end, you don't want to utilize more than 30% of your credit line. So if you have a $1,000 credit card, each month you should spend between $250 to $300 on that card, and then immediately pay it off. So like for you, what might make sense is anytime you put gas in your car, use that card and then pay it off, and then do it again next month and pay it off. So yeah, so payment history, 35%, credit utilization is 30%, and then the length of credit history is 15%. So another thing I've seen people do is they'll open a credit card to improve their credit. They'll get into the house, they'll get into, you know, a new car after the house, and then they'll close their credit cards, and then their credit will take a massive hit. Banks and lenders like to see that you've had debt open for a long period of time. The longer it's open, and the on-time payments with the responsible like usage percentage of that debt goes a long way. And then number 4 was just what we'll call like a credit mix, and that makes up 10%. So having different types of debt, car loan, credit card, mortgage, just a blend of all of those. If you ever go in, like if you use, say, Experian to follow your credit, you will see that there's different models that they use for arriving at a credit score. So if you go get a car loan, they use one credit rating model. If you're opening a credit card, they use another model. So if you only have a credit card and you're applying for a car, look, I know everyone turns 18, they don't automatically have a house or a car or a credit card, but as you establish more credit and more debt, it's important to have a mix. And then the last one is the last 10% of these top 5 is opening too many accounts at one time is definitely a red flag. So I usually recommend people have 2 or 3 cards open, but what you don't want to do is open them all at one time. So maybe open your first card in January, establish like 6 to 12 months worth of credit history, and then open a second one. So yeah, anyways, to recap, those top 5: payment history is 35%, credit utilization is 30%, the length of your credit history is 15%, the credit mix is going to be 10%, and then the last 10% is going to be new credit.
So for someone that is just starting out, how would they build up credit?
Yeah, there's a couple different ways. One would be to go out and get a secured credit card. You can become an authorized user on somebody's account, like credit builder loans you can take. And this is real good, like if you just turned 18, for instance, asking a family member with good credit to add you to their card. So you're an authorized user. It's almost kind of like co-signing, right?
Yeah,
with
right,
the car loan.
right.
So the bank is good with that because, like, let's just use like a kid-parent situation. Kid turns 18, parent has good credit, you become an authorized user on their account. The bank's comfortable with it because they've seen, hey, the parent has like 20 years worth of history of timely payments and good credit usage. So they'll have no issue adding you on at that point because they know ultimately that you're kind of like a co-user on that account with somebody who has credit. Then say 6-12 months later, you go out and apply for your own card, right? And the bank's going to look and say, hey, he had good payment history. So you kind of benefit from being on the account with somebody who already has history. But yeah, those are 3 good ways to get started. Secured credit card, become an authorized user on someone else's card, or take out a credit builder type loan, which that would be like my last option, just because I don't feel that the rates are super great on those, but it is an option to get started.
So tell me a little more about being an authorized user. Basically, like if I became a part of your account, that would, your good credit would help me too.
Yeah, that's the key though. So if you are going to become an authorized, like if somebody's going to go to a parent or a family member and become an authorized user, you do want to make sure that the account you're becoming an authorized user on, that they have good credit.
Okay.
You know, if you were to go to somebody who was, say, 6 months removed from bankruptcy and has tons of missed payments, it's not going to do much for you. So the authorized user is great, provided that the other person has good credit. So,
Right. All right, well, those were just some tips on how to build credit from scratch. The next topic, and this will be a big one because I'm sure that a lot of people watching this video probably are here for this reason. And so what if somebody has already made a lot of credit mistakes? You know, they've maxed out a lot of cards, missed payments. Like, what's a good way for them to recover?
Yeah, the first thing is to catch up on the late payments. So if there's like a compounding effect each time you miss a payment. Like if you miss a payment in January and you don't pay it in February, you know, it's almost like January and February are a compounding issue in terms of your credit rating. And then, because they look at like 30-day lates, and then they'll look at how many 60-day lates and how many 90-day lates. And so it's there's this compounding effect that it has. So the very first thing is to kind of stop the bleeding and get caught up on the late payments.
Okay.
Any overdue balances. And then the other thing is, once you're caught up on that, going back to like the credit utilization, is what usually happens when people have missed payments is they've also maxed out their card. So they're over that 30% threshold. So now it's like another compounding negative effect. So after getting caught up, you then really want to pay down, right? So I think another thing people forget to do is they'll get like their credit score and say, oof, that's not good. There's a lot of missed payments I need to work on. But they also can go through and look to see if there's any errors. I mean, we see it all the time when we pull applications where somebody has something on their credit that shows a missed payment. They know they had a couple, but certainly didn't have this one. You can dispute those. Lender can help you do that, or you can do that. Like if you, let's say, going back to Experian, if Experian is reporting something wrong, you can actually go on their site and dispute. There's a button you can push and say, hey, I actually made that payment that shouldn't be reported, and here's proof of that. So, and then the last one is, I would say don't close. People who have gone late or maxed out cards tend to do this weird thing. They'll like get caught up, they'll pay them down, and then they don't want debt anymore, so they don't get in trouble, and they'll close the account. And that doesn't help either. So once you get caught up, once you pay the balances down, once you've gone through your credit and figured out is there anything to dispute, like all the hard work's over, so don't close the account.
Okay. All right, well, before we move on from this topic, I just had one more question. So how long does it take for these improvements to reflect on your credit report?
Some happen very quickly, some will take time. Give you an example. We've been in escrow where there was something reported on a client's credit report improperly, and it changed their score to a point where it raised the rate, raised the payment, and their ratios were now off. And there's something called a rapid rescore. We were able to go in and help them dispute that with the credit bureau because it was wrong. Those actually those update real quick. Like we can get those updated in less than like 7 days. The key factor with those is what's being reported is inaccurate. So those are pretty easy to see a very, very quick change in your score. But if you've had, let's say you've gone 3 years of just constantly missing payments, it's going to take time. Time is one of like your biggest friends or enemies when it comes to credit reporting. So what I would say, like if this is you and you hit hard times and it was 2-3 years of multiple missed payments, one thing that you should do is, even if you think you're a year or 2 years away, 3 years away from buying, is you should still get with somebody like Aden or a lender and kind of go through the process as though you're applying for a mortgage, because what that will allow somebody to do is kind of create a game plan. And then, you know, there's agencies that help with credit repair. You know, if you've had a lot of missed payments, they're also good. They'll pull your credit, they'll go through and actually help you dispute things. But yeah, time is a big factor, like we talked about when we broke down percentages. So I look at it this way: if it's a simple mistake that happened one time, you'll rebound right away from it. If it's something where it's been years of missed payments and years of mismanagement, those are going to take some time.
Okay.
And that's where you really need somebody like from a professional level to come in and look at it with you and say, okay, it's probably going to take a year to clean up. Here's our plan.
All right. Well, that clears up some of the questions I have. Moving on, what is our homework for the week?
I would say the first thing to do is, if you don't have a secured card, and if you can't get one, get added as an authorized user on somebody's card. I think that's the first thing that anybody should do. Again, if you're just beginning, well, two-part answer. If you're just beginning, open a card. And again, stick to that 30% rule. If you can't open a card on your own, then get that authorized user to help you with that. That will help establish on-time payments, and will also start that clock on that length of time of having you know, the credit history with that card. I would say if you are rebounding from some credit issues, I think the best place for you to start would be to reach out to one of us. We can help get you in touch with somebody who does credit repair. But I think for somebody who's had established credit, your credit took a big hit because of missed payments, I think your starting point is you need to get with a professional to put together a game plan to start getting deletions of anything that should not be reporting, a game plan in terms of how to start repaying and restructuring debt perhaps. So yeah, I would say homework: if you're new, get that credit card, start using it properly. If you've had debt and you've had some trouble, reach out to us so we can kind of help you build out a game plan. And it starts with doing a deep dive and reviewing your credit and seeing what needs to get cleaned up.
All right, well, that's all we have for today. Thank you for watching. If you're just starting your credit journey, we'd like to know in the comments, what's your biggest challenge right now?
We'll dive in, we'll help, and appreciate you watching. We'll do this again next week. Do we know what we're talking about next week?
We're talking about saving for a down payment next week. You won't want to miss it.
Okay, awesome. See ya.
All right.